Good afternoon, everybody, and welcome to today's webinar. My name is Grant Reynolds from IP Global, and I'm joined today by Owen Carroll, our German investment manager. Welcome, Owen.
Thanks, Grant.
Wherever you are, in Singapore, Hong Kong, or Europe, or elsewhere, I hope you're all keeping very well. Today's webinar is about essentially a Q&A session following on from our successful webinar about 2 weeks ago now, where we had an absolute influx of questions after the webinar. So we've decided to take the most prominent questions in today's session and also provide an update on COVID-19 in Germany at the outset as to what's going on the ground right now. Okay, so let's have a look at some of the detail. So I think we can safely say that Germany has dealt with this crisis incredibly well. When we look at the amount of deaths, unfortunately in this table there are significant numbers, but Germany, with their excellent healthcare system, have really responded extremely well to the crisis. And if we look at from an economic standpoint, the German government has responded very, very quickly to get the wheels of the economy turning very quickly indeed again. So Owen, what would be your sort of quick thoughts in terms of situation on the ground in Germany right now?
So as you say, Grant, they've really dealt with this as well as any country could have, and that's really translating into the economy. We've seen things starting to reopen, which I know we'll touch on a bit later, but Deutsche Bank expects that the economic recovery will start in the second half of this year, and German GDP should be back up to pre-crisis levels by the middle of next year, which is very positive indeed.
Yeah, I mean, if they can get the GDP up and running so quickly, I mean, it's incredible what they've done in such a short period of time. Okay, so these are some of the headlines we've seen in the last week, and if you're a sports fan, of course, it's looking much more positive now. I believe the Bundesliga is looking to start on the 15th of May. Recently we saw, of course, superseding all of that, the fact that Angela Merkel has sat down with the 16 regional state governments to decide on the path forward and unwinding some of these lockdown measures and starting to get the German economy going again. So, Owen, really what's been happening on the ground in the last week or two then in Germany?
First of all, if we look at the Bundesliga, this is very telling. It's the first large European football league to start reopening. Obviously, they've had to do that behind closed doors, and all the players are doing a 2-week training camp, which is effectively quarantine, and that's how they're getting things up and running, which is great. And then, as you said last week, Angela Merkel sat down and hammered out a deal with the 16 individual federal states. So it's great to see the federal states are all playing a part here then, and they're all taking control. And basically, they've obviously there's always risks with something like this, and it's a bit of uncharted territory. So what they've negotiated is an emergency break. So if there's 50 out of 100,000 cases over a 7-day period in any of the federal states, they automatically have to go back into lockdown. So yes, they are unwinding, but there's obviously huge amounts of precautionary measures there in case there is a resurgence. So yeah, it's all very positive.
So there's a contingency plan in place just in case things start to go into a second phase, etc., so that they can really manage that very quickly.
Yeah, and that's an automatically now that will happen. Okay. So if they hit that number automatically, then that federal state has to go into shutdown. But it means the rest of the country can continue to operate as well. So it seems like a very credible way forward.
Okay, and also I see that public transport wise, apparently they have to wear face masks as well, which is obviously going to ensure that public transport will keep going. Is that right?
Yes, exactly. So they've obviously seen now in other parts of the world where they're using a face mask has been very successful in actually curtailing the virus. So now everybody in Germany, when they're outdoors and on public transport, they need to wear a face mask.
Right. Okay. Yeah, it's certainly sort of groundbreaking in Germany in terms of how they're responding right now. Okay, so finally, as a sort of a further update from our last presentation, we also had the positive news that Germany's new Berlin airport is set to take off 9 years late. It's been a subject of much unfortunate ridicule, particularly with a lot of my German clients and very un-Germanic, the challenges to the new Brandenburg airport. But finally, we saw the news last week that the airport is about to get opened up towards the end of this year. So, Owen, I mean, obviously with this this new airport, I mean, it's going to be amazing because, of course, you can't fly direct to Berlin from Hong Kong, for example, and a whole basket of cities in China right now. And of course, it's really going to open up the Asian market to Berlin. So, you know, really, what's the significance of this airport in your view?
Well, if you think about it, it's the capital city of Europe's largest economy and the fourth largest in Europe. And when you land in Berlin Tegel or Berlin Schönefeld at the moment, and you're told that these two very, very small, very old airports are the main airports of the city, it's incredible. It's actually incredibly frustrating as well, especially for me. I obviously travel from Hong Kong to Berlin and Germany a lot, and I have to fly directly over Berlin to Frankfurt to take a connecting flight back to Berlin to one of the small airports. So it's going to be a complete game changer. This is really going to cause so much more growth now for Berlin. And it's also really interesting what's happening as well. Obviously, we spoke before about Tegel in the north, which is going to be decommissioned, and there's a huge amount of regeneration that's going on around there, and alongside it, the Siemensstadt 2.0. So that was actually supposed to all start. Tegel was supposed to close 6 months after Berlin Brandenburg had opened, but because of everything that's going on with the coronavirus at the moment, Tegel Airport is actually shutting now in the middle of June. So from a positive side, that regeneration can actually start early, so the construction teams can actually get on site, because construction is going on as normal in Germany at the moment. So certain parts of regeneration are going to start earlier, and then obviously when air travel really kicks back up, we'll have the new Berlin Brandenburg airport there offering all the routes to all the large commercial centers around the world. So this is really going to put Berlin on the map.
So presumably all that commercial space that's going to come on so much earlier, and much needed commercial space, is possibly going to be taken up by a lot of Asian investors, Asian companies who you know, have got this super access into Berlin now.
Yeah, absolutely, completely possible.
Yeah, wonderful. Okay, so I mean, if we look at in terms of the the property market right now in Germany, I think, you know, if we take a step back to the sort of German psyche, Germans are typically very cautious. They haven't historically invested in the stock market as much as a lot of other nationalities, such as those from the US, etc. And when Germans are looking to invest right now, you know, what they see is 10-year bond yields at very, very low levels indeed, given record low interest rates. You know, the DAX with dividends and the challenges on the markets are certainly fluctuating. So really what we've seen is a flight to safety. We're seeing more and more actually a flight to quality as well, in terms of investors taking a look at the German market and realizing that some of the yields on offer are very, very good and strong and stable as well. And in terms of the property market in Germany, what we typically see is a very strong undersupply. The fact that German planning permission takes a very long time to get. There are lots of rules and regulations, but when we see the population is rising quite significantly now, and that's due to a number of factors. Germany has always been very welcoming to foreigners. I think there was a net migration of about 400,000 last year. And certainly with the post-Brexit era, there's more of a shift to Germans welcoming lots of foreigners who perhaps may have gone to the UK as well. So there's a real strong underpinning that we see in the property market. And presumably, you know, when you speak to your developers on the ground in Germany, you see that you know, they're having challenges, you know, getting planning permission, etc. And it's you know, obviously that's quite a good thing, that it's tough to get projects.
Yeah, so I suppose especially in Berlin, but of it in Germany as a whole, it's always been notoriously difficult and laborious to get planning permission for any sort of development. In the COVID-19 world, that has become so much harder, obviously, because a lot of places have been closed down for quite a while, and a lot of that is still paper-based, not the digitalization.
Yes.
Hasn't happened yet in the government sectors in Germany and such like the planning authorities. So from an investor perspective for developments that are continuing to be constructed, that's fine because obviously everything's carrying along. But what we see in the future is actually a more pronounced undersupply than we even envisaged pre-coronavirus. As you said, Germany has always been a safe haven. We've been talking about that for many years now. And over the last 10 years, from the GFC to Brexit to the trade war, we've noticed that there's been capital flows that have continued to go to Germany, and especially more in times of global uncertainty. So we're seeing that again now, and as you can see, a 4% yield in Germany in a very stable residential investment is incredibly attractive when we see what's going on. As you said, the bond yields are at record lows, and there's so much volatility in the stock market at the moment. So Deutsche Bank, in this recent report, they actually think that demand for residential properties in Germany could go up because of this crisis.
Yeah, and of course, wrapping that all up is a very weak euro as well for people who are investing in Hong Kong or Singapore or using that strength currency.
It's definitely a currency play there as well.
Yeah. Right, let's get into the Q&A now. So what we've done here is taken the 6 most popular questions that we've received over the past week or so. Must apologise, we got many questions, but there was a common theme, and what we've done is picked out the remaining best 6 here. So let's get straight into the questions, Owen. The first one, what is your view of the German property market post COVID-19? So in the world we're in now, what are your sort of quick thoughts on the market?
Well, I think what COVID-19 has done is pretty much just highlighted again the very strong investment case for Germany. And I mentioned that Deutsche Bank report. There's actually been 2 Deutsche Bank reports that came out recently. And again, they just come back to demand for residential property in Germany could very much increase due to this crisis, both from the investor side looking for a safe haven, but also immigration. So again, in these times of crisis, when there's been other economies that have really been struggling, a lot of the youth has moved to places like Berlin, and that's given rise to the startup scene and everything that's going on there. So again, there's so much positives to look at, especially because Germany is the first country to come out of this as well, that it's really, we believe the investment case for Germany is even stronger now after COVID. So our original investment case holds completely.
Right, okay. Next question is an interesting one. I mean, we have a lot of clients who are interested in Germany. Perhaps they're previously invested in the UK. They know the legal structure there. And so this question is quite pertinent in terms of just sort of sharing thoughts on the investor protection that people would have if they were to invest in Germany.
Yeah. So in my eyes, I believe that Germany has actually one of, if not the most safest real estate markets, especially for off-plan investment. And the reason is you only pay in line with the construction, and this is all monitored by your solicitor and also the notary. So say, for instance, if we just think about the actual purchase process, normally when you exchange contracts with the developer, you pay your acquisition costs at that point.
Yeah.
And depending whether, say for Berlin, for instance, it's about 9%, Leipzig, you're looking at about 7.5%. So they go in your legal fees, your notary fees, land transfer tax, everything like that. Next point, you have the first 30%, which is usually your equity portion. So you're thinking, okay, what's my kind of security there? So basically, you transfer that money to the trust account of your solicitor, and the only way that the developer can actually get access to that money is when they prove that they've started construction, but also that your name has been registered in the land registry with a priority notice to say that, okay, that you've actually you've basically purchased 30% of your property to that date. So it's incredibly safe, and that's the same then for all of the stage payments that your mortgage will pay all the way up to completion.
Yeah.
So it's compared to other markets where you might put down a deposit and that could actually be at risk.
Yeah.
It's actually risk-free in Germany in that instance.
Yeah, I think that clearly shows that there's a lot of investor protection, and the fact is, you know, people have been buying and selling property in Germany for many years, so the legal structure is very mature and solid. And of course, as I understand, if projects run late, typically there are penalties that are paid to investors as well quite quickly. Is that right?
Yes, well, that's not specific to Germany, but it's more what we negotiate into the contracts for our clients.
Yes.
So we have a completion date that the developer will suggest, and it's normally 18 to 24 months from when they begin construction. And normally what we ask for the developer, and they sign that in the purchase contract with our clients, is that basically 1 month, 1 to 3 months after the estimated completion date, if that property is not ready for handover, so it can be tenanted out, the developer has to start paying rental compensation to our clients.
Okay, so there's an additional sort of wraparound security that we build into the contract.
Yes, absolutely.
Okay, next question. There was always going to be one on tax. So German property tax, what taxes are there, Owen?
So as a whole, I believe the German market is one of the most tax efficient in Europe for real estate investors. Let's start with capital gains tax. So if you hold your property for 10 years, and that clock starts ticking when you exchange contracts. So the 2 years construction, you're 2 years into that 10-year hold already, which is great. After 10 years, if you hold it, if you sell it, then you don't pay any capital gains tax. So that's huge when you compare to other markets in Europe where you could be paying up to over 30% capital gains tax. You don't pay any of that in Germany. Then from your mortgage interest side, you can write off 100% of your mortgage interest. Again, in other markets, it might be 50%, it might be 0%. In Germany, they allow you to write off 100%. So really, what we've seen with our clients so far is they pay very minimal. And anything then that really does fall into the first bracket, you're paying 14% on that. But as I said, when you consider all the things that you could deduct, any sort of the maintenance costs or anything to do with your property, or if you had to furnish it or anything before you start letting it out, that can all be written off. So when we look at all the markets in Europe for investing in real estate, Germany really has the most tax efficient from an investor's perspective.
Yeah, that's really a standout, the fact that no capital gains tax after 10 years. I mean, there's very few markets globally where that is in place now. So that's a real benefit for investing. Okay, next question. What is a maximum loan to value? And typically, what sort of interest rates do we see? So where do they start from, interest rates as well?
So what we've experienced for international real estate investors in Germany, you can get between 65 to 70%, depending on the city and depending on the location of the product. We actually have quite a few lenders that we work for. Some lend 65, some lend 70. So it really depends which one comes in which city and which project. You're looking at about 2.9% is what we usually see. There's a new lender that we're looking at the moment in Berlin. It's a bit different because you actually need to go to Berlin to get this mortgage, but they're looking at as low as 1.3%. Wow. Now for those projects though, the size of the unit has to be over 40 square meters. Right. So again, it's a pretty particular offering. Yep. And 1.3, 1.2 is basically what the Germans pay. Right. But international investors are paying anywhere from 2 to 2.9%.
Okay, and would they be fixed rates? 2.9%, could that typically be a fixed rate?
So 2.9% in Berlin is you can fix it for 10 years.
Right.
And then actually in Leipzig we have 2%, which you can fix up to 20 years.
Okay, so in effect you could fix for 10 years at 2.9%, which is a good point to review the investment, because of course after 10 years there's no capital gains tax.
Exactly.
Yeah. Okay. Right, this has been a popular question. Can I buy a unit in Germany without the need to fly there to sign documentation? So lots of clients, again, one of the considerations is, do I need to fly there? Do I need to get lots of documentation ready and then head off to Germany, or can I do that remotely?
So yes, you can do it all remotely, which is obviously great news. And again, one of the reasons why Germany is such a great market for investors. So basically all you need to do is your solicitor in Berlin will send you a power of attorney document. You bring that to the German authorities in your home country or where you're living. So you can bring it to the notary there, or you can bring it to the German consulate, and they will notarize that you have given a power of attorney, and only for the purchase of that property. And then you send that to Berlin, and that means your solicitor, he can go to the notary's office. So every binding legal contract in Germany has to be signed in front of a notary, and you need to have both sides of the contract there as well. So you'll have your solicitor who represents yourself, and then you'll have your developer or your developer's representative on the other side, and they will exchange the purchase contract for you.
Thank you. And I think certainly the feedback from our investors has been that that process has typically worked very well over the years for investing in Germany.
Definitely, and I suppose obviously at the beginning, you know, it's always difficult to pull all these parts together, but we've been doing this now since 2014.
Yeah.
So we have an incredibly streamlined service, so it's very smooth now.
Yeah. Okay, so final question. This is, as I say, we've had a lot of sort of feedback in terms of, well, what are you actually up to? So this question, you know, what projects are you planning to launch? So what are you working on at the moment, Owen?
So I'm still very heavily focused on both Berlin and Leipzig.
Right.
And there's a very interesting report that came out yesterday, or sorry, 6th of May, which looks at transaction volumes in the past 12 months. And you'll see there's about 18 billion euro of transaction volumes have taken place in Berlin in the last 12 months. So there's a huge amount of institutional funds that are still going in there. Yeah. But there's also been a kind of a search for yield in the B cities, which Leipzig is #1 of the B cities. So they have gone up 22% in the last 12 months as well. So it was very reassuring to see where IPG are putting our money. Institutional investors are also doing the same. So we've got a very nice prime building, which we actually just launched very recently, called the Ambassador, which is in the center of Mitte.
Right.
The CBRE report just came out last week as well to show that Mitte had the most capital growth of any German of any district in Berlin last year. So we, you know, that's confirmed our decision to go into Leipzig for that prime product. Yeah. That is really where the demand is, and that's where there's a lack of development land as well. So, you know, a lot of Mitte is now developed, so there's not going to be a huge amount of schemes coming there in the future. So we really like that investment. And then also I'm really looking for some nice new projects and locations in Leipzig as well. Yeah. So I'm working on 2 very closely at the moment, which and we're not sure exactly when we'll be launching them, but, you know, hopefully in the next 6 to 8 weeks or so.
Yeah, I mean, I have to say, you know, Berlin just seems to go from strength to strength. And I was reading the recent report that was produced in Leipzig, just talking about their super 10-year plan and all the growth coming in from various sectors. And of course, they've got wonderful infrastructure there already, both rail and cargo. You know, Leipzig certainly seems to be a city as well that will be coming up for good investment opportunity in the years ahead.
Absolutely, yeah. As you just even touching on the infrastructure, they've got the airport there already, which has actually had one of its busiest months with everything that's going on in the world. So as you said, it's a very diversified economy in Leipzig, and they've structured it that way completely on purpose. And so, so we've seen that really, you know, some sectors they'll benefit more than others at different points in time. But having that diversified economy means that certain sectors will keep growing and support the rest. Really interestingly, for such a small city, you know, Leipzig, it's just got over between 500,000 and 600,000 people at the moment, but it's expected to go up to over 700,000 by 2030. So that's the same amount that you have in Frankfurt today. Yeah. But they have the infrastructure in place to support that. It has the most amount of tram rail lines, second only to Berlin. So when you consider that, you know, the city can really grow. It has the infrastructure there already. Everybody can still get around. They can get to work. So again, looking at all the B cities, as we call them, you know, Leipzig really stands out. Yeah, you know, it had one of the highest of the 3 capital growth rates across all of Germany in 2019.
And what's really the supply looking like in Leipzig? Because of course, one thing investors are concerned about, this is a question for me now, just picking it up, is about the rental market. So there's always concerns about that. So how would you say the rental market looks in somewhere like Leipzig?
Well, yeah, it's incredibly strong. You know, we've seen vacancy rates come down from 12% in 2009 to 2% or even below 2% today. And the reason for that is we've had over 100,000 people move to Leipzig in that time, but they haven't even built 12,000 new units since 2009. So there's an awful lot of demand, and obviously from us as well, we're trying to invest in Leipzig, but there's still a huge lack of projects there and development land. And, you know, the same story, everything moves quite slowly in Germany. Say, for instance, our first project in Leipzig, Ruststraße, is completing now at the end of this month. And of the 7 units there, we already have offers on 4 from the rental market, and they haven't actually started marketing that yet. That's people walking into the lettings agent that we have in Leipzig, and they've just heard that, they've just mentioned it there. So again, seeing that demand before we've even started marketing the unit is fantastic. Well, as I said, they just don't have that construction capacity yet. So it is going to take a long time for them to catch up, especially because they expect such another influx of population between now and up to 2030 and on to 2035. There's no way that the construction sector can actually keep up with that. Which obviously from an investor's perspective is great.
Well, that's extremely positive, and presumably in Berlin, vacancy rate is similarly quite low.
The Deutsche Bank's new report suggests that it's actually dipped possibly below 1% now. So it's been moving from 1.3 to 1.2, 1.1, and now we expect it might actually even go below 1%. And everything that's going on in the world is going to slow down these new building applications as well, and construction and the beginning of new projects.
It's very interesting. I mean, when you think about London, I think the vacancy rate is about 2.3%, which is very low. And in effect, you're saying Berlin is half of that. So quite amazing.
Exactly.
Okay. All right. So I think we're pretty much out of time. We could certainly go on with lots more questions. So Owen, thank you for joining today. That's been very insightful and provided some really good information there.
My pleasure.
To you tuning in today, I hope that's been an informative update in terms of COVID-19, and hopefully we've answered some of your main questions very well. If you've got further thoughts, if you need further information, please do drop us a line. As I say, do look out for the new work we are planning in Berlin and Leipzig very soon. It just remains for me to say to you all, keep well, keep safe, and look forward to you all tuning in again very soon. Thanks very much.